Okay, so what kind of situation do we currently have on Euro CHF? It's time to make an update. So in the previous analysis on Euro CHF, first of all, let's start from the first analysis that we made. We said after this impulse, and we wanted to see a correction, and after the correction, we wanted to see the continuation to the upside to complete the weekly M formation, which I will now dive into. So from this level, we wanted to see this huge impulse to the upside. And in fact, we did capitalize on this move with students. I will link the analysis in which basically we said that we wanted to see this in the description. So we wanted to see this nice move to the upside, which the market now gave to us. And the target for this move to the upside was exactly here, as you can see also from the analysis that I'm linking below. Why did we want to see the market reach this level? Because we had created this overextended M formation. And after an overextended M formation, you want to see the market make a move to the upside and complete the pattern at the neckline, which is exactly what the market has now done. Then, in the last analysis that I published, what did we say? We said from here, we want to see the market show a nice correction because this impulse was way too strong and we need to see a proper deceleration. In other words, we want to see a nice retracement to reach this level here. And I will link that analysis in the description as well. And now the market has given us the move to the downside that we wanted to see. And if you were able to capitalize on the moves, great job. But what is next? Where is the next opportunity for Euro CHF? Now, to understand where the next opportunity is, we first need to see at what kind of situation we have on the weekly time frame. In fact, on the weekly, we have a market that, as we said, had created a strong impulse. Now, if we want informations on the retracement, we have to take our Fibonacci on the impulse. And what we can see that currently the market is sitting at the 50% retracement. Now, going down on the daily, what we can notice is that at the 0.618, that is where you really have the structure. You really have a strong demand area. Why do you have a strong demand area? Because in all of this move to the upside, there is one candle which is not related to the move, which is this red candle here. And you definitely want to see the market reach this red candle because you have strong demand inside of this zone. Before I will show you how we will approach this with students, I want to show you what kind of situation we currently have from a COT perspective on the euro and what kind of situation we currently have from a CHF perspective if we look at the COT data, so the commitment of traders, what the biggest institutions and speculators in the market are doing, so the non-commercials. Now, if we look at what we have from a euro perspective, we can see that currently we were sitting at 81k net positions with the last report, showing that we had a clear transition from an institutional perspective from having way more shorts than longs, so a negative positioning, to having way more longs than shorts. And in fact, currently we have 174k longs and 93k shorts with a 29.9% long exposure. But we definitely want to see some profit taking on all these longs and the move to the downside, specifically because if we go and see what we have from a CHF perspective, we can see that clearly CHF is getting very strong. We went from minus 3k to plus 8k, and with the last report, hedge funds added another 118 longs and closed 100 shorts, bringing longs at 13k and shorts at 4k. So strong CHF, leading the meltdown to the downside on Euro CHF that we wanted to see. Now, the next opportunity comes here. Now, obviously, since the market is trending to the downside from a 4-hour perspective, because on the daily we have a strong retracement, obviously on the 4-hour everything is bearish. We can't be looking for the long yet because everything is bearish, so it would make no sense. Always remember, monthly, weekly, and dailies for direction. The 4-hour is where you're supposed to be looking for entries. So the way in which we will be approaching this with students is very simple. We will be waiting inside of this area for the market to shift from a bearish market to a bullish market. And if the market will do this, then at that point, we will be waiting for the market to provide to us one of our valid entries. And as soon as the market provides to us one of our valid entries, we will be looking for a nice long position for a rejection away from this strong demand area. But first, we need to see a shift from a bearish market to bullish market. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.